Okay, welcome everyone. So I'll be talking about the basic forex. Like I promised, I will try to go straight to what you need and not so many things. Right? That's what you need for the basic forex. These are the things I will be covering in this session. We're having what is forex, how to use a laptop, desktop, concept of buy and sell. These are the topics we will cover. All right, so let's move ahead. Now this is forex. Like I said, forex is just buying and selling of currency. Right? You buy currency, you sell currency. Buy and sell currency, meaning that either the exchange rate of a currency is falling. When you anticipate it's falling, you can buy. All right. So you can sell when you anticipate it's going up. You can buy it. So it's just trying to make analysis and understand when will this exchange rate increase and when will the exchange rate reduce. That's all currency market is all about. So currency market and forex market are the same thing. Like I said, everyone trades forex. Banks, institutions, retail traders, government bodies, everyone trades forex. Okay, so forex market is not an illegal business, it's a legal business. The only thing that made it look like it's illegal is because of the approach people give it. People make it look like it's a gambling because the market runs an average of $5.3 trillion every day. That's what the market runs. So because of that, people think it's a gamble, and they come in with $100 and they want to make $5,000 out of it, and that's not possible in the forex market. So I'll also be teaching that. Okay, so that's what forex market is all about. Okay, so we'll talk about concept of buy and sell. Remember I said in the forex market, when you anticipate that the currency wants to rise, you buy. When you anticipate the currency wants to fall, you sell. Okay, now you see the way this thing rules. The way this side is, this one here, this rising. See the way this currency bought. So this means that euro is buying and CAD is selling. That's what it means. So when you see buy this up, the way it went up means it went bullish. All right, the way it is when it's going down means this one. The way my hand is, I hope I get. Okay, let me have this one here. It means it's going down. The way it's falling, the price is reducing. These are the prices. Okay, so if you notice that price 1.4610, 1.6810, 1.69 is increasing. So while coming down is reducing, while going up is increasing. So while coming down, it means it's selling, and while the price is increasing, it means it's buying. All right, so this is the candles that the market is in. These are called candles. These are called candles. This one here, where you have it here, so you have called this candle. These are called candles. All right, so this is a bullish candle. See, because it increased in price, so it's called bullish candle. Because it reduced in price, it's called a bearish candle. All right, so the candles are, that's what that means. Okay, so just so you understand the bullish and the bearish stuff. So this is a bullish and this is a bearish move. So meaning that if you anticipate that this price, this exchange rate, this is an exchange rate. All right, that's how it's being written in the forex market. So 1.46310 is the price of euro. All right, so everything you see here is a base price. So the first currency, just understand what I'm saying. This euro here, euro CAD. So euro is called the base currency, CAD is called the quote currency. What I mean is that the first currency, the first one, like euro in CAD, this is called the base currency. This is called the quote currency. Okay, base currency and quote currency. So that means if you're buying this market, it means you're buying euro to sell CAD. So it's an automated system. It happens at the same time. All right, so just know that you're buying euro to sell card. So that's why in the forex market, either you're buying or selling, you're making profit as long as you're in the right direction. So if you're selling buying euro, meaning automatically you're selling card. So euro is the base currency. All right, so every currency, the first currency you see on all the market watch, on all the currencies, is the first currency. Okay, so I'll get to the market watch angle. It's just so I'm just mentioning this so that you understand what I'm saying. All right, so that's what this one is all about. Back to the slide. We're having, when you anticipate the market wants to rise, so you buy. The way the price was increasing, like I showed you in the MT4, that's the way you buy. All right, the price is reducing, you sell. That's what the whole thing is all about. That's what the whole forex market is all about. Now we'll have this instant execution. We'll have this instant execution. We'll have this. These are different types, the different ways you place trade in the market. All right, these are different ways. I will make a separate video on how to download the MT4 and where to impute your trades. Okay, but these are different ways you place trade. Just understand it. For an instant execution, I'll have to turn the screen. Okay, it's a tab actually, it's not a phone. Okay, now that's it. You click on this particular button here. So you see all these things are called market watch. All right, all these things are called MT4s. Currencies. So if I click on any of the, let me use this. If I click on any of the currency, I will click open chart. So now I can see those charts. All right. Also, I can go to this one here. I'll see all this here. Okay, this is the way to do it. Now, if you want to place trade, like I was showing, I showed you that I have 4 ways of placing trade. All right, we have an instant execution, buy limit. We'll have an instant execution, we'll have a buy limit, sell stop, and buy stop. We'll have these 4 different ways of placing trades. Okay, so I'll be showing you how to practicalize this. Now we'll say that instant execution is another you place using the current market price. Now this is your MT4, right? Using the current market price. If I open, let me say I open this AUD JPY open chart, and I intend to place trade on this chart. What you see moving here, this is a buy price, the red is a sell price. Okay, so buy, sell, meaning that this is the buy price of AUD JPY and this is a sell price of AUD JPY. Okay, so that's what that means. Now this is the current market price, the bid and the ask. This is the current market price. Now if I want to sell this market, if I say this exchange rate is going to fall to this level, to somewhere 82.690, that's my analysis. I'm giving an instance now. All I'll do is just to click this plus here. When I click this plus here, and then I'll come here, I'll teach you when I get to the cost of the how to choose your lot size. I'll mention that, but let's just come here and choose a lot size. All right, so I'll come in here. I can decide to put a stop loss and a take profit. I'll also tell you how to do that. Then I'm just showing you how to use the MT4 now to place order. So I'm just trying to tell you how to place different types of order. So I will click buy. Okay, click sell. All right, now I have this is a demo account. I have this sell now, so I expect this price to come here. Because I expect this price to come here, and I expect, that means I want the price to sell. That's what I mean. That means I want the price to reduce, the exchange rate to fall. So because I expect this price to sell from this zone down to this zone, all right, I'm going to put here as my take profit. So when the price sells to this point, it will now be my take profit, meaning even if I'm not around, even if I'm not looking at my chart, and then the price comes down to this level, it's 2.779, I'll return back to my trade, this particular one here. So remember, I expect this price to fall to this zone. That's my analysis. Remember, I didn't do it. I'm just assuming things here. There was no analysis made. I'm only trying to show you how to use this. So I expect this price to come down to this level. All right, because I expect price to come down to this level, I will have this level as 82.748. So this point will be my take profit, because if the price sells like I anticipated, I'm going to make profit, because at that point I'm selling anticipating that price is going to fall. Okay, so now it's 2.748. Now let me go back. This is the trade that I place. I will hold the trade and I'll modify it. So my take profit, this blue line or this green line means a take profit point on your phone. So I have 80 what? Let me take it again. I have 82.690. Let me just use this price here. 82.690. So I'll come back here and I'll click 82 point, oh, not close order. I'll modify. I will hold it. It should show modify. 82.69. So I'll type 82.69. I'll click modify. So now you see this is my take profit point. So you see TP, take profit. That's how to use MT for, right? TP means take profit. Now let's say this price, that the way it's going against my analysis now, it starts going against my analysis. I can say the way this price, when I enter take profit here, I have to stop my loss. Remember, I want the market to sell, meaning that if the market continues buying, remember, increasing in exchange rate means it's buying, and reducing in exchange rate means it's selling. Right, so let's say the way price is increasing, that's okay. I will stop my loss anywhere at this price. I will tell you how to do that. 83.370. Price gets to this point, it will close me off on loss instead of be going on loss and then taking all my money. It's 3.370. That's my take profit. So I will go back to my trade. I'll hold it. I'll modify. So I'll do 83 points. What? I really forget that figure. 83.60. Let me use 3.460. So I'll do 83.460. Modify. This is my take profit. Sorry, stop loss. 83.460. 83.46. I'll click modify. See, I've modified my order. So now I have that here. So now anything that takes price to this point, it will close me on loss without eating more into my equity, into my money that I came to the market with. If this price falls down to this level, it will close me on profit. So I'll come back and see that I've made $10, I've made $30, I've made $100. If you hit this point, it will close me automatically without me, even when I don't have internet or have internet. All right, that's the way this one works. So back to that. Remember, I said if it's going up, it's buying. If it's reducing, it's selling. Okay, back to the part. So that's instant execution. Enter this market with the current market price. I just went here and I just went to this point and I click buy or sell. I didn't try to change this. All right. Okay, now this is this particular category. Now let's go to the number 2. We have what we call buy limit. We'll say buy limit is an order you place below the current market price, anticipating a bullish move. Buy limit is an order you place below the current market price, anticipating a bullish move. Bullish means buying, bearish means selling. All right. Okay, so now let's go back to the chart and implement that. Let me use a different currency so that you don't get confused. Alright, now this is this currency now. Say buy limit is an order you place below the current market price. These two prices are current market price. Well, this is a buy price and that's a sell price. Alright, the two of them are current market price. So remember, it's an order you place below the current market price, anticipating that when price comes to your price, it will go up. That's the essence. Give an instant where this price is here now. I anticipate that when price sells, remember going down is selling. When this candle sells with it somewhere here, then when it gets here, it will start buying. All right. So I can take this price here. Let's say this price comes down to this level here before it starts buying. Maybe I'm not too comfortable selling from this particular level. I just want price to come down here before I join it for the buy. direction. Remember, going up means buying, going down means selling. All right, so now I want this price to come down to this level. What I'll simply do is just come here, take this price 0.85349, 0.85349. So I'll go back. This is the currency, so I'll click on this plus here. Let me go back. 0.853. Let me get that again, please. 0.85359 or 354, 0.8535. Okay, 0.8535. So I'll go here, plot, and then I'll come here. Remember, it was buy limit. All right, buy limit is an order you place below the current market price, anticipating a bullish move. So I'm anticipating that market will come, the current market price will sell down to my entry. So this is my entry, so I'll put that price here, 0.8535. so this is my entry price. All right, so I'll click place. You see, this is the order. It has not been activated. You understand? So meaning that the way these ones are reading, that they are floating. It's called floating. That's what I mentioned in the meeting yesterday. These ones are floating here. This is a demo account. I'm just trying to make practice. All right, these ones are floating here. That's the way this one is not showing anything. See, it's not showing it. I'm not in the market yet until this price comes down. Come see my buy limit. Are you seeing it? My buy limit. So until this price comes down to this level and then starts going up, then I'll be on profit. But if this price comes down to this level and continues selling, I'll be on loss. So therefore I'll have to stop my loss below this price. So I will pick a stop loss. So I'll just come here and pick 0.85280. Now I'll go back to my trade. Remember, I'm on euro pounds. This is the currency pair I'm trading. So I'll go back to the trade, 0.8528. So this is my stop loss level. So I'll hold it, 0.8528. I'll modify. I'll put a stop loss. So my stop loss is 0.8528. All right, I'll modify. Now you see, if I click on this trade and I have my stop loss here, I have my stop loss, my price I entered, and then I have my stop loss. You see this, my stop loss price here. So now what I don't have on this trade is take profit. See, SL is stop loss, TP is take profit. What I don't have on this trade now is take profit. So I have to go and take my profit. So I'll go back here and I say, if this price comes down here and rise again, look at this. If this price comes down to this level and then rise up, if it comes down like this and rise up like this, then I'll be on profit. So therefore I'm going to take my profit above, because I anticipate buy means it's going up. So my plan is that price will sell down to this level and then it will buy. All right, so my profit, I can take my profit anywhere here. I can say 0.85628. I'll go back to my trade, 0.85628, 0.8562. I'll now click modify. All right, you see, so I have my take profit. You see it? I have my take profit here, I have my entry here, and I have my stop loss here. So what this trade means is that I expect this price to sell down to this level, pick me up, activate my order. Once I activate my order, it will start showing things like this. If I'm on profit, it will show this color, this green color here. If I'm on loss, to show red, right? This means I'm on loss of $6.75. I'm on loss of $1.43. Remember, this was not analyzed. We're just trying to practice something. Then this one means that I've not been activated on this market, and it's the type of order is a buy limit order. All right. Now that's for that. Please, you can watch the video twice or so you can understand me and practice it on your own. I'll also show you how to download this MT4 on your phone. All right. So now let's return back to this. That we have done the buy limit. Now let's do the sell limit. Let's do the sell limit. Let's take the definition first. Say sell limit is an order you place above the current market price, anticipating a bearish move. So it's the opposite of buy limit. Sell limit is an order you place above the current market price, anticipating a bearish move. Bearish means selling. Remember, bullish means buying. Alright, so now let's go back here. Let's use the different currency pair so that we don't get confused. We can use this one. Okay, sell limit is an order you place above the current market price, anticipating a bearish move. Bearish means it's going down, bullish means it's going up. So now what are we to do here? We're going to pick a price. This is the current market price. Remember, sell limit is an order you place above the current market price. So we're going to choose a above. So we'll choose any price above 1.2018. Remember, this should be analyzed, but I'm just trying to tell you how to place trade. Okay. In case you're asking how do I not get the price on my own, don't worry, just how to place trade. When we get to analysis, you understand when you should do all this and you understand how to use this. But for now, you need to understand how to place the trade. So we have 1.20189. So meaning that I expect this price to buy and buy to this point, then it will start selling. That's what I expect. So now I'm going to take this price as my sell limit price. 120161. I'll go to this plus again. 120161. I'll click here and then I'll go here and I choose sell limit. So I have do I still remember the price? I have to go back, please. I have to pick up that price. 120. Let's see, 1203.230. 120230. So I'll go here, 120230, and I'll click here and I'll choose sell limit. 120230. 120.230. So that's it. So I have this now. So I'll click place. Alright, you see, I'm now activated. This is the trade. Sell limit. See, the type of order is sell limit. So what that means is that anytime price goes up to this point and starts going down, I'm on profit. But if price goes up to this point and continue buying, I'm on loss. So I'm going to stop my loss in case price continues buying. So I'll pick this point here and stop my loss, because the essence is that price comes here, you should start selling. But if eventually you come here and start and continue up, then I'll be on loss. Therefore, I have to place my stop loss as my SL comes in. So 120356, I'll choose that point as my stop loss. 120.356. So I'll return back to my trade and I will hold it. I'll modify. Remember, 120. I'm not correct. If you're not correct, it will not highlight. Let me go back, please. I don't know what I have with all these figures. 120320. Okay, let me just use that. 120320. So I'll modify 120320. 120.320. So I'm correct. So if this thing does not highlight, if this modify does not highlight, that means you're not correct. All right. You have to check why it's not highlighting. So I've put the, remember you can choose all your price even before you enter the trade. I'm only trying to show you one by one how the whole thing works. You can just open this price, choose your entry, choose your stop loss, choose your take profit, and enter the trade at once. I'm only showing you one by one so that you can also learn how to modify. Okay, so now we'll have our stop loss here. The essence of that stop loss above is that we expect this price to run to this point, and when it runs to this point, we expect it to sell. Selling means it's going down, right? Just look at my arrow. I expect it to come up here. Okay, let me draw something so you understand. I expect this price to come up here and then sell. All right, so meaning peradventure it continues buying, I'm going to be on loss. So therefore, I'm going to have my stop loss above, which is here. So now when price comes here and doesn't respect my analysis and continue going up, it will automatically close me off here on minimal loss instead of going and be eating all my money and then all of a sudden I don't have equity in my account again. That's the essence of having that stop loss. All right, so we can continue with that. So let's take our take profit. Remember, we'll have stop loss on this level, so meaning that we expect price to come here and then sell, right? Expect price to come there and sell. Therefore, we expect to take our profit below, right? We expect price to come here and then go down. So anywhere below is fine for take profit. So I'll choose this price for take profit, 119.750. So I'll choose 119.750 for take profit. Let's go and take that trade, 119.750. Okay, sorry, it's not a new trade. I have to go and modify. So it's a sell limit. I'll hold it, modify, 119.750. So 119.750, modify. All right, so I have, you see here, I touch it there, and I have my stop loss, I have my take profit, and I have my entry price. Okay, that's what that means. I thought this one, I have my stop loss, and I have my take profit, and I have my entry price. Okay, now that's how to do this too. Please make sure to go through this like 2 or 3 times so able to understand it very well. And then we'll have, while you're going through it, it's best to have your MT4 close to you so they can practicalize alongside with me. Okay, so that's how to place trade. Then we'll have let's do a different one. We'll have the next one, sell stop. Sell stop is an order you place below the current market price anticipating a bearish move. Sell stop is an order you place below the current market price anticipating more bearish move. So now let's look at the empty form. Choose a different currency pair so we don't get confused. Okay, now sell stop is an order you place below the current market price anticipating more bearish move. So what that means is that I want to make it simple for you, so I'll look for a trade that has a sell already. Okay, it's also a buy, but let me just get it. We can use this. You can use anyone, either buy or sell. I'm trying to make it simple for you now. Sell stop is an order you place below the current market price, anticipating more bearish move. Now that definition means that it should be below the current market price, right? So this is the current market price. Remember, it's a buy and sell market price. So it's below. So we'll choose the price below 0.700. Now we expect price to come here and continue selling. Remember, for the buy limit, we expect price to come down and go up. But for the sell stop, we expect price to come down to this point and then continue selling. We are just not comfortable entering at the current market price. You're not comfortable entering here, all right? We expect price to come down to this level and then continue selling. That's why we chose this price. Okay, so 0.70072. So I'll just go here, 0.707. So I'll come here, I'll choose here, I just click on it here. I see a sell stop, so I'm on sell stop. So I choose the price 0.772, right? 0.772. So I've chosen this price now, so I'll click place. So remember, I'm on a sell stop. If for any reason this is not highlighted, place is not highlighted, then you are wrong. The system is never wrong. So there's something that either your price is not correct or you're not choosing the right order for that trade. Okay, so you need to cross check why you're wrong each time you try to place trade, and then this particular point that you have placed or modified or anything is not highlighted. Okay, so we have done. Now this is a sell stop order. Now you notice I don't have stop loss and I don't have take profit, so I have to go and put my stop loss and take profit. Now what's the idea of stop loss? Let's return back to the trade. So I have my sell stop here. So the idea of this trade is that when price sells down to this point, it should continue selling. Then I'll be on profit. If this price sells down to this point and then reverses for a buy, let me draw something so you understand better. When price comes down to this level, it should continue selling. All right, then it will activate my entry. Then I'll be on profit. Peradventure price comes to this level and then starts buying, then I'll be on loss. Therefore, I have to have my stop loss above my entry. So this is somewhere here I can pick up a stop loss, all right? So I can choose this price to be my stop loss. Don't be mindful of the current market price. Just choose what you want to choose, okay? So I have 0.70294. That's my stop loss. So I'll go back here, 0.70294. I'll sell stop 0.70294. I'll modify. So I'll click here, 0.70294. So 0.70294. See, the modify is highlighted. If for any reason your modify is not highlighted, this point is not highlighted, then you're the one wrong. You need to check your price. Okay, so I click modify. So I have my stop loss now. So I go back to that point. So I have my stop loss. Do you understand? It doesn't affect the current market price because I'm not in the market yet. You see, it's called pending order, so it's still pending. Prior to the time the current market price gets to any of my entry, then it will be activated and start reading like the rest. Okay, so now I have this here. So what else is remaining? I have to put my take profit. Remember, the essence is that when price comes to this level, it should continue selling. So I have to put my take profit below. Remember, sell is below. So I come down here and I pick a price 0.69810. So 0.69810, I return back to my trade 0.69810, right? Sell stop. So I touch here, modify 0.69810. 0.69810. I click modify. Alright, so now notice that I have my stop loss and I have my take profit on this trade. Okay, so it's remaining one, buy stop. So buy stop is the opposite of sell stop. It's another you place above the current bullish move, anticipating more bullish move. Look at that. Let me use a different currency pair just so we don't get confused. This is price, right? And then I expect this price to come to this level. But this is where it is at the moment, and I don't want to join it now because I think it will still come down here before going up. So what I'll do is I will take a price above. Remember, buy stop is an order you take above the current market price, anticipating more bullish move. So now this is current market price. This is current market price, right? Let me remove this so you don't get confused. Wow, this spread is very high. The difference between this price and this price is what is called spread, right? So each time you start seeing this kind of wide spread on your broker, it's dangerous. It's very high. The spread shouldn't be like this, and you see it's peculiar to this particular pair, AUDNZD. The other pair that was open, the spread was not wide. In fact, I was actually thinking I'm the one that placed the red line there. I just noticed that it's a buy price and the sell price, and the difference between the buy price and sell price is called spread. So meaning that from here to here, minus 06833 minus 06 whatever 85, any difference you get is a spread. Okay, but I'll talk about how to calculate that. But for now, that's it. So let's say, let me use a different, I'm not comfortable with that spread. Let me use a different currency that has a low spread. AUDs, they're having high spread this moment. Let me choose. Okay, I'm fine with it. Now we'll have these two currencies now. So remember, a buy stop is another you place above the current market price, anticipating more bullish move. So now I'm going to choose above. Remember, always remember the concept of above and below. So this is above. So I have 131.172. 131.172. So now I expect price to come to this level and then continue buying. I don't want to join this particular current market price. I just want price to come up here and then it can pick me up and continue the buy. That's the essence. I want price to come to my level here, come here, all right, then continue buying. Then I'll be on profit. So now I'm going to choose this point as my entry price. So 131.318. I'll go to my price 131.318. So I'll go 131.318. I'll choose my buy stop. So I'll click here. So I have 131.318. So I click place. All right, now I'm in the order, so I have my buy stop here. All right, I have my buy stop here. So now, but I don't have my stop loss and my take profit. Now remember, the idea is let price come here and continue going up, then I'm on profit. Remember, when my market is going up, you're buying. Market is going down, you're selling. All right. The trading is surely going to be bitter long. That's why I have my voice ready, so I don't get tired while talking. Okay, so price comes to the point you buy, it activates your order, all right, and then continues buying, then you're on profit. It comes here, activates your order, continues buying, you're on profit. It comes here, activates your order, and then go down, you're lost. Therefore, your stop loss has to be below your entry. So you can choose a price here as 131.185. 131.185. So I'll go back to my trade. 131.185. I'll hold it and then I'll modify 131.185. So I have 131.185. 131.185. So I'll click modify. Going back there, so you see I have my entry and I have my I know you're thinking, won't price pass here before it, yes, price will pass here without activating your order. The only time price will activate this order is anytime it gets to this particular price here. If it gets to this particular price, it can activate your order. If not, it can't activate your order. All right, so price gets here, you can activate your order. Then if he returns back, you can take your stop loss. Remember, the idea of stop loss is to stop your loss on minimal, so that you don't over risk or over lose your money or lose all of your money in one trade. All right, so now take profit. Remember, it's a buy stop, so the anticipation is that price gets to this point, price buys and gets to this point and then continue buying. So I'm going to take my profit anywhere above, so I'll choose this price 131.780. 131.780. So I'll return back to the trade, and then I will hold it 131. Sorry, I have to check the price again. I can just choose anyone. 131.605. I can choose this one now. 131.605. 131.605. So I have modify 131.605. So I have this now. So I click modify. Now this is the way to place trade. Right now I have the 5 different types of order. Remember, this one I enter with instant execution before I now put instant execution. Just means I open this particular trade. Again, I'll just do that. I open this particular trade, and then I just go to my plus. You see instant execution. I just click sell or buy. That's all. I don't need to place a pending order, so that I enter sell. This all depends on your analysis. You see, that's instant execution. All right, now this is for this particular one. Okay, so now let's look at the next one. We'll have peep. Okay, just we'll be looking at this one in the next clip. I would like to make it a bit short. There's a thing about having your training in sessions so that it doesn't get too boring. Okay, so this is the 9 minutes already, so I'll have to have this video to the next one. So the next clip I'll be dropping is peep. It means the measurement. What I was mentioning last night, how to place, how to calculate your profit, calculate your loss. That's peep. All right, so I'll teach you how to calculate that using your empty phone. Can do some manual and automated calculation so that you understand how the whole thing works. All right, once again, thank you for watching this, and hope you enjoy it. Make sure you go through it over and over again just to understand it. Thank you.